So there's a lot of content out there, especially on social media, about the GP and syndication business, right? A lot of people position it as a fantastic business for anyone that's looking to continue to build out their investment portfolio or their multifamily portfolio and continue to build out a revenue and income stream out of it. Now, I 100% believe in this model. That is my business as well. But I think what a lot of people don't do enough is talking about the reality and the financials of actually operating and scaling out a GP or syndication business, right? Being a general partner. So what I thought I would do in this video is actually kind of give you guys my opinion of the dirty behind the scenes of what it's really like to scale out a GP syndication business, the financial decisions, the operational decisions that you have to make, that may not necessarily be the pretty stuff that you want to hear about, but is really the reality of what it takes to build a business like this. So hopefully this is helpful for you guys. With that, let's get at it. What's going on, guys? My name is Lior and I'm a multifamily investor here out of Boston, and welcome back to my channel. Now, before I get into the meat and potatoes of the video, super quickly, guys, if this is your first time on my channel, first of all, welcome. Second of all, make sure you smash that subscribe button for me, putting out tons of new videos every single week, talking literally everything about multifamily investing. That includes operations, acquisitions, deal analysis, construction, raising money, and everything in between. So that's the kind of content you're looking for. Make sure you subscribe. So as I said in my intro, I kind of wanted to give you guys an honest look of what it's really like and what it really takes to scale out a GP business. Again, it's a wonderful, wonderful business model that I am a true believer in and have already reaped a lot of the rewards of it. But there's not really a lot of content out there that really talks about what it really takes to scale out, right? And some of the hardships and that you're really gonna have to figure out as you scale out this business. So I thought I would just shed some light on it in case any of you guys watching are trying to do the same. So let's start out on the financial side, right? Because a lot of people get into this business with the idea of, hey, I want to continue to grow out my multifamily portfolio because I'm probably making some money. So I think this would be a fantastic way to continue to scale out and build out my income stream. So maybe I can eventually quit my job, whether I'm in a W-2 position or run some other business and focus on this full time. Now, at surface level, this is a fantastic, approach to think about it, right? Because obviously if you're going to quit your job or quit your other business, you're going to need some sort of consistent income coming in to replace whatever source of income you have currently, so that you can focus your full operations and time on multifamily. But the issue is financially, it doesn't really stack out like that. And here's why, right? A lot of people think, all right, well, I'm going to continue to buy, syndicate multifamily, and boom, my income streams are going to jump up and it's going to be fantastic. The issue is on the cash flow side, right? From a property perspective, if you've syndicated or if you're a GP, you know that you don't actually make that much, right? On the cash flow side. And, the reason for it is because most syndications and most deal structures have some sort of preferred return structure, right? So basically the limited partner, the equity partners, they get a pref return on the cash flows, and usually that eats up a large chunk of the cash flows that are created by the property, right? So, maybe there's some spillover after the pref and you can take in a little bit of that. But typically, if there is any, it's probably not going to be super significant. So as a GP, you really only start to see meaningful returns come to you once you've either exited the deal or you've been able to refinance and return a lot of the equity back to the LPs. Now, obviously in that scenario, you're gonna, that's where a lot of your proceeds as the GP are gonna be made, right? Because you basically hit the promote at that point, but it takes time to get to that, right? So if you're gonna syndicate a deal today, it could take 12, 24, even 36 months in order for you to hit those goals, right? Some of my early deals that I syndicated back in 2019, 2020 are only really now starting to really kick in and really create a true income stream for me. So it really takes time for that, for the cash flows from the property to hit your pockets as a GP. So if you're going into this business and thinking, oh yeah, like I'm gonna syndicate and boom, I'm gonna start reaping off cash flows on the property, that's not typically really how it works. Most of the income you're going to take as a GP is probably gonna come from two sources. It's gonna be your acquisition fees and maybe any sort of asset management fees you put in, again, depending on your deal structure. Now, the acquisition fees are certainly great and they help a lot, But remember, if you're going to be a GP and you're someone with a target to scale out a portfolio, right, it means you're probably going to have to invest a lot into your business, right? And I can tell you, as a GP, I've taken on quite a bit of overhead in order to really invest and scale out my business. I've hired assistants both on the ground as well as virtually through Upwork. They help me with everything from operations to marketing, and literally everything in between that I need help with. I've got technology that I use to help streamline ops, right? So I've got a fair amount of overhead that I've taken on in order to really help me scale out and run this business smoothly. So that's usually where these fees, these asset management fees, and acquisition fees typically go to, right? They get reinvested right back into the business. So don't take it as like, oh, hey, I'm pocketing my acquisition fee, that's going right in my checking account, and that's my spending money, right? Because usually if you really want to grow out a business from the syndicators I've talked to, you're really going to have to reinvest really aggressively. So my point by going through this kind of exercise of the financials is, if you're expecting a massive payday to come in as soon as you start syndicating deals and you're going to have all these different cash flows hitting your pockets, the reality is if you're really going to scale this out and really build something meaningful, I personally think it's going to be very, very difficult to achieve. And that's why I think when you're actually first scaling out, and this comes from my personal experience, and again, from just talking to a lot of syndicators out there, you're going to need to maintain some other source of really consistent income to fund everything altogether, right? I personally, if you guys don't know my backstory, I've actually been running a residential brokerage team for a couple of years now, and that's why I continue to run that, right? Because that helps me provide consistent income while all my fees on the investment side just basically get reinvested right back into the business and help me continue to scale that out. I've talked to other syndicators that have figured out other ways to have consistent income coming in outside of the syndication biz. I know some people that do Airbnbs and have been really good at it, and they've scaled that out. I know some people do have contracting businesses, right, that they run. But basically my point is it's pretty likely that you're going to need some other source of income really coming in even as you're scaling out and have a significant amount of assets under management, right? I mean, as I was hitting 20, 25 million assets under management, all that, when I first started out, I thought it'd be very different. But what you'll learn is, again, you're buying and buying, but those promotes take time to hit, right? But even as you continue to scale out, it's going to take time for those for those additional streams to come in. So I think it's really, really critical, and I don't think this is really talked about enough in the multifamily space, but it's going to be really, really critical, I think, for you to have some other additional source of income coming in, at least until you hit kind of that tipping point where, yes, then you really do have all those cash flows coming in, and then you can really do it full time without needing another source of income. So hopefully this is helpful, guys. Again, for you guys that are kind of in the midst of scaling like I am, or if you're thinking about trying to really scale out this business, I think this is a topic that's not talked about enough. Again, it's a great business. We've made a lot of money for our investors, ourselves. We've improved communities. It's an amazing, amazing business, but it's a tough business to scale. It's very capital intensive. If you're really going to grow this out, you're going to have to reinvest a lot. And a lot of times you're going to see a lot of rewards too on the equity side, which, again, don't get realized until you refinance or sell. So it really does take time for a lot of these financials to really, work their way up and really eventually flow to you. So hopefully that helps. That's kind of my 2 cents on the topic. I know it's not talked a lot about, but I thought it'd be helpful. If you guys have any questions, please hit me up, put them in the comments below, and I will definitely help you out.